The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the optionsinsider.com, as well as the old Options Insider Radio Network. And today we have a rare treat in store for you listeners because we're doing one of our much beloved live panel sessions here. We're all in the same room. We don't get to do that very often, don't get to say that very often, because quite frankly, we're all usually scattered to the four winds. We have people dialing in from Maine or from out in the burbs or from downtown and vice versa, and all these different areas. Sometimes I'm dialing in from parts unknown, but today, most of us anyway, on the panel at least, are all here in the same room. Starting off with a welcome back to a long-time contributor who's been on a bit of a hiatus for understandable reasons of late. He is Federal Holiday Mike himself, good old Mike Kavanaugh of Know Your Options fame. Mr. FHM, welcome back to the program, sir. It has been far, far too long.
It has been far too long. It's great to be back. We are excited to be hosting from our future new home, RCM.
Yes.
And they're going to be our custodian at Know Your Options. So we're looking forward to it, and we were very happy that they let us in to their conference room to host a live show today. And I can say that the last couple months of rockiness looking for the new custodian.
Why don't you get into that a little bit? I think a lot of our listeners have not been really familiar with what's going on or don't know the ins and outs. Maybe you can touch on a little bit here of what you guys have been going through over the past few months and
sure.
what really happened.
Yeah, a lot going on. So basically what happened was we got news in about mid-May that our custodian, our clearing firm, which was Brokers Express, which is a wholly owned subsidiary of Options Express, which was purchased by Charles Schwab, was exiting the financial services industry. So we were basically given 90 days to find a new custodian for our business. And basically what that did is we had to expedite the how trustworthy are the people we're talking to conversations from what would normally form, over a couple of years. We did over a couple of dinners in a couple of weeks where we were interviewing a multitude of firms. We talked to about 27 different firms from all over the U.S. We had guys flying from New York, Texas, Florida, California. There's a wealth spring or a cornucopia of different BDs. There's actually did a lot of research on it. There's 133 registered BDs within the Chicago city limits, and we talked to about 20 of those. So at the end of the day, we've been in the industry. I've been in the industry for 15 years. I was on the floor at the CBOT for 7 years, so knew a lot of people. We started talking to a lot of people, and at the end of the day, we narrowed the 27 down to about 6. We narrowed the 6 down to 2, and then we made our final decision on where we'd land the day before the 4th of July, and we've been steadily putting our transition plans together. So in September, when Brokers Express is out of the industry completely, that we can kind of hit the ground running. The points that I tried to emphasize the most, because my clients know me as Happy Mike answering the phone and on the trade desk, and I haven't been on the trade desk for a month as we've been going through this process. So what I tried to emphasize the most is, when we started working with Brokers Express I started back then, I think I was their third rep back in 2004, I put a huge emphasis on the people that we were working with. Are these somebody that I can trust? Are these people that I can have my clients' monies with and not lose sleep at night? The answer was yes back then, and over the years that remained solid. They're a great firm. A couple of the guys in here work at the firm on the show here, and I think the world of those guys. It was an unfortunate situation. We were basically forced to move on. So remembering back to the Ned Bennett, Tom Stearns, when I first started with Brokers Express, we were basically in search for those guys at a new firm, and we think we found them in Bobby Schwartz and Ed Sweeney here at RCM. So we're really looking forward to the future. We've got a great team. We've got a great group of clients. If it weren't for our clients, we couldn't have been able to even find a new firm. So if I pulled anything out of this experience, it's just a reminder of if you surround yourself with good people, good things can happen.
Well, like I said, all of us here on the panel are very glad that you guys found a great home. For those of you who are not familiar with the advisory business, your custodial firm is really a big deal from an advisory capacity. If you don't have one of those, you really can't house your client accounts. So finding a new one of those was imperative. We're glad to see you guys have landed here. And for all of you KYO users and perhaps KYO customers to be, things are business as usual over here at KYO. So by all means, tune in, dial up on the old knowyouroptionsinc.com, click on your 18-minute portfolio review, and Uncle Mike here, Federal Holiday Mike here, will answer the phone personally and do a nice 18-minute portfolio review just for you. Just mention Option Block somewhere in the call, and you'll be all set. All right. And also joining us after that very long-winded but interesting introduction here of some very interesting topical stuff, we also have two boys holding down the old OX hot seat and fighting for the microphone. Starting off way down to my left on the end of the table here. 2 shows in a row, Mr. Grigas. I don't know what to make of this, but our listeners, it is a rare treat. Mr. John Grigas, 2 shows in a row and also live, and also only a few beverages in, so still very, very lucid.
Very coherent. Yeah, I know what's going on. I can still read the ticker tape a little bit. But no, it's good to do a live show. I always enjoy it. It's always good to feed off each other. And I really enjoyed hearing Kavanaugh's perspective. Really brings it down to earth. And I'll be looking for the made-for-TV show coming soon to Lifetime, because it really ripped me up.
One request is I am played by Denzel.
Denzel Washington?
That's right.
Yeah, the resemblances here.
It's uncanny. Now that I see you for the first time in this new light, I understand what I've been thinking all this time. It's like, who does that guy remind me of?
No, but it's good. It's good to be here with Sean, too, as well. Meet the guys. And,
yes, Sean Fitzgerald, also holding down the OX hot seat, sitting on the other edge of the seat. They're sharing the seat. And also, thankfully, not sharing a microphone. But Sean, welcome. This is your first ever live appearance on the show, so welcome to you too, sir.
Yeah, and first live with my own microphone as well. And yeah, I'm looking forward to it. Met a few guys for the first time face-to-face that I'm used to hearing only through the Skype. So it should be relatively interesting as the show goes on.
Yes, now you can put faces to our haunting voices that have haunted your dreams for all this time here, Sean. All right, with the introductions out of the way, we're going to dive right into the trading block.
The trading block.
And that rockin' theme means it's time for the trading block as well. This is, of course, the portion of the show where we dive into, surprise, surprise, what was trading. And it was a relatively mild day on the street. We're getting used to having these on the show, recording days, when we have these days where the market can't really get out of its own way. And it seemed like today was one of those days. Most of the major indices closing relatively unched on the day. S&P down about 0.5%. So not even a full tenth of a percent here to 1385. The Dow down a couple of handles to 13073. A lot of unched activity on the day. So despite that, was there a pretty active day on the desk for you guys? I know sometimes the overall numbers can belie what's actually going on with a few names over lighting up the tape of the desk there.
Yeah, I mean, overall volume is picking up. I mean, through expiration this July, we saw volume month over month increase significantly. I heard from some of the exchanges on Friday that it was a big volume day, and we kind of saw that continue today, even though the markets were mixed and pretty much unchanged. Futures, commodities are continue to be active, and we're seeing still some earnings plays or some leftover earnings plays from last week and the week before. Corn being up to almost 21 cents today.
Corn.
I know.
Let's start there then. That's our favorite crop, our crop du jour here.
It's unbelievable how much attention it gets. I mean, it's on like the
even
world
with
news.
the margin change. Are those in place yet? Or are those
they went in place last week.
That hasn't stemmed the corn love yet.
Not at all. People just do direct deposits and get their money right over to us and continue to meet their margin calls. But people are seeing it in the news now, so it's actually getting some world news and garnering some interest among people that actually don't trade commodities. So we're seeing new accounts open up and people getting into it. Probably not the smartest idea to do it when it's this volatile and when it's having limit down days like it did last week. But I had mentioned that how it popped off the limit down, and when you see that, it's kind of an indication that this rally might not be over with. And today that definitely proved it, up about 2.5%.
It's surprising. Not even usually when you see margin changes, that's kind of the kiss of death for a lot of these initial runs. Like people kind of get shaken out of it. But it sounds like the corn love is in full force.
Yeah, from what we've seen in the past, like when gold and silver, when silver ran up to about $50 about a year and a half ago, as soon as the exchanges put in this huge margin, that's the kiss of death. Yeah, because people can't meet it. They got to sell their futures to meet the calls, the margin calls, but that hasn't happened yet. It looks like it easily has $1.50 left to run. So we'll see what happens.
Wow, go corn, Mike! You missed the last show, but. And our intra-show chat, John sent around a really interesting picture. And not what you're thinking of, by the way, but something very, very different. It was a picture of someone who had been vacationing with his family, apparently at a cornfield. I don't know. But he had his little children taking a picture next to a cornfield, and the corn was towering above them. And the second picture was a picture a year later, I think this summer, of the same kids at the same cornfield. And the kids had grown a little bit, obviously, just a little bit, but the corn dramatically different, like almost smaller than the kids now, dry, husked out, a completely different picture than this green monstrous crop that was there just a year ago. So that was very indicative of what's really going on in the corn crop. Of course, we get the Regis report every year from his pilgrimage out to the Iowa cornfields, but sometimes seeing it in a picture gives it that extra emphasis.
Yeah, it was about 7.5 feet high, and the kids 368 days ago to the day, or same spot, and then they took it again, and it wasn't even higher than the kids, so it was about half the size. I mean, it's just
crazy.
You're going to see some impact at the grocery store and all that other things because the corn is in everything. It's a byproduct of anything.
I was reading today, beef heading off to the races now, because everything's corn fed on the beef realm. So I guess we can kiss off our steak dinner after the recording today. Sean, by the way, I thought you were setting us up with that today, right? That was on your dime, the steak dinner.
Oh yeah, new guy.
John
new guy has to pay. Did I mention that?
Yeah, the
Gibson's,
credit.
I believe, tonight afterwards.
Yeah, credit card is unlimited. Actually, wanted to touch on Home Depot. Actually, started getting some phone calls today. Just some straight up put buying on Home Depot, and I couldn't really figure out why. Dug in a little deeper. Noticed earnings are the 14th of August. As we all know, expiration is the 17th. So actually looking into this a little further, the put-to-call ratio was quite dramatic on Home Depot, not only for August, but also for September and November. We got the stock closing around 53 and a quarter, down 46 cents today. But if you look at the August 5250 puts, almost over 6,800 contracts traded today versus 290 calls.
Wow, so that a lot of pretty near at the money action too there on these puts. They're not going, they're not trading down to the 45 handle or something like that. They're getting pretty meaty puts.
Even if you go down to the 49s, you'll notice almost 3,200. Now this is all for August, and zero on the call side. But hopping over to September, same strike, 52.5 put, 4,300 plus, 690 calls only. And then digging on over to November, the 5250s, 1,100 puts, 380 calls. So I'm not sure what these traders are actually into. I'm sure there was probably a large spread in there somewhere. But I was getting quite a few calls. I probably had 4 or 5 in a row until I decided to dig a little further into this.
Well, some of the farther out ones could, of course, be some size shareholder, of course, maybe putting on just some near-term protection. When it's that far out and it's so close to the at-the-money, that tends to be indicative of perhaps someone with an underlying axe to grind. But the other stuff, near-term, that sounds like a pure-out naked earnings play, perhaps. And I'm looking at the chart here. This guy doesn't exactly have the wrong picture. This thing's been almost straight up since September of last year. I mean, it was trading down the 28 handle around August, September of this time last year. So about a year ago, this thing has almost doubled, actually more than doubled. So it's been quite the ride for Home Depot. Perhaps you're thinking something a little bit is going to come off the table. You'd have to imagine in this economy, of course, the stock hasn't shown this, but in this economy, you'd think, building supplies are down, those sorts of things are down across the board, so that Home Depot would be suffering, but apparently that's not the case. So maybe this guy's thinking the bloom is coming off the rose here for Home Depot. Is that probably the most active one? Are you still getting a lot of people rolling in and out of Apple or some of the other things like that?
I mean, Apple testing 600 again, up $11.50 today. But I mean, people just cannot stay out of that. Priceline, CMG, any of those high flyers, Google. Not really Netflix anymore because it's a sub $75 stock. But I mean, the bounce in Apple with a lot of products coming out in October. I mean, we're seeing a lot of interest on that continuing.
But Sean, maybe we'll get on that a little bit because you mentioned the hot products, John, or the upcoming products. Those are, of course, the minis that everyone's kind of obsessed about. We do an interview show here on the network as well, of course, Options Insider Radio, and we had a guest on recently, just about a few hours ago. And our perspective from radio time might be a little bit different for the listeners when they actually hear it. But we were talking about this exact topic and how excited he was for the future for minis and how what they might impact. I know John's weighed in on them on the past on the program, but Sean, I haven't heard your perspective. What do you think about these mini contracts? Let's say mini Apple, and how are they good for retail, bad for retail?
I think they're good for the retail trader. If you have the retail trader with the $5,000 and $10,000 accounts, they think that they're not even allowed to look at the Apple, Google price lines of the world. Now you bring these 10 stock size options to the table. I think you're going to get a lot more activity, a lot more interest, not just only from the retail side, but I think the institutional will also jump on this. And in hand, perhaps we'll have a combination of the retail and institutional traders all at once, enjoying a brand new product that everyone would like to enjoy.
Yeah, and listeners, we are also joined in progress here by Mr. Seabass, a.k.a. Mark Sebastian, from OptionPit.com. Some of you may know him as, indeed, the Greasy Meatball. But he is here today looking quite festive, I might add, joining us for the live program. It's been a while since we've had you in the same room, Mark. So
I know.
Welcome to the program.
I wore my pink tie for you, Mark.
Festive, yes. I know you.
I know it's your favorite.
You like wearing that for the ladies on CNBC, I think that's what it is.
It was either the pink tie or I was going to wear a mock turtleneck. Either way, I thought I'd come in pro longo.
I know Maria Bartiromo really goes for the pink these days, so you have to play it up wherever you can get. All right, but Mark, we were just chatting about Home Depot and a variety of other interesting things that were lighting up our collective tapes today. Corn, of course. What was catching your eye in today's activity?
Well, a couple of things. I've been watching VXAPL and VXGOG. That's the VIX of Apple and the VIX of Google. Both. Apple got right near its all-time low, and you may recall the last time VXAPL hit an all-time low, Apple moved $200. Google, right off the heels of the same thing, rockets itself up. I think they're both setting up, especially into this Samsung trial, which really is Google versus Apple, not Samsung versus Apple.
It is funny how they went the side way to go after Google.
They did. Well, because they couldn't go after actual Google. I think it's a real interesting play. You've got super cheap options, and if the ruling is in Google's favor, you'll see Google pop and Apple drop. And if it's the reverse, I think you could see kind of the opposite. And so it sets up as a potential kind of straddle swap, some type of, you could set up some sort of volatility neutral, delta neutral play, try and take advantage of your belief one way or the other, or kind of just maybe go long straddles in both and see where it leads you. When Vol and Apple got so cheap that if somebody hadn't stepped in to start buying it today, I would have probably started a real buying spree. But what happened was,
stood there and said, "I will take all comers."
Well,
and Apple,
you know what?
Wow.
If VXAPL drops,
back up the trucks.
If VXAPL drops below 20, it is you have to buy it. You just do.
It's not like it's
one of
been
the nice things about being
wallflower
a
of a name lately.
Right. Well, it's nice to you got to buy Apple options. One of the nice things about being a prop type of guy versus a market maker is if I step in and buy some options, I don't have to worry about some big player actually picking the bottom. And, a desk getting a bunch of idiots to sell and then having their desk buy the bottom and not being able to participate. I can kind of, I'm not going to be forced to buy a bunch of extra junk. So at that point, I would have been stepping in. Now, thankfully for me, one of the ways I look to buy options is when options get really cheap and then someone else buys them first. That is the best time to buy options. It's also the best time to sell. When options get really expensive and somebody comes in and sells them, that is when it's time to sell. Not before that, folks. And on the buy side, to a lesser extent, I think it's the same thing. When options get really cheap, step in and buy. And then, corn is another absolute debacle and is setting up for a very, very ugly run.
But it is funny, though, how in this day and age, particularly on these tech stocks, we can look at things like fundamentals and volatility, yet so much of it is just being litigated in the courts right now, and that's completely out of any sort of fundamental or technical analysis. I mean, it depends who has the bigger and stronger patent portfolio and who wins on any given day. This Apple versus Samsung nonsense and how it's eventually going to extend to Google. If you're playing in the tech names these days, you have to be as much of a patent lawyer as you have to be a master of option implied volatility and everything else along those lines, which is, I'm sure, outside the realm of most of our listeners here on this show. But a disappointing development. One we'll probably get into on one of the new shows we'll be launching on the Options Insider Radio Network shortly, which will be our trading technology show, untitled as of yet. But we'll get into a lot of these topics like patents and IP law and all these other fun topics that are spreading into the world of options.
That's going to be super.
It's sexy stuff.
It's going to be important, but boring.
Sexy stuff.
You know what it is? It's like the organic chemistry of tech trading.
Yes, that's what we should call it. The organic chemistry.
It's the Weed Out podcast. If you can get your way through this podcast, you can trade technology. If not, you should stop.
Hopefully, it won't be trading. It'll be more like, in back end, stuff like that. People for the institutional audience.
You know what you should do is start a podcast where all you do is summarize white papers from English major, English major doctorates.
Next, that's the next show.
English dissertations.
Called EnglishLit.com, the podcast.
I would love that. That'd be great.
Good sleeping music or sleeping programming. But Sean and John, is there anything else you saw that was pretty interesting lighting up the tape? Feel free. We'll just do Express Block. I think we'll have a whole kind of free-form trading block segment today because we're all kind of all in the same room.
Wrestle at the end, right?
Yeah, and we'll all battle at the end to see who comes out on top.
I watched Rocky IV over the weekend, too, so you will lose.
You will lose.
It was perfect.
That was great.
Best movie ever made.
That was a classic.
I actually, on a pure segue, on a pure tangent note, I saw that. That's the one with Ivan Drago, right?
Yeah, it was just on yesterday.
I saw that. Happened to see that in the theaters when I was, 10 years old. That was one of my all-time favorite movie-going experience. Here I was a kid. I really didn't know all the politics behind it. People were standing up and cheering and yelling at the screen when Rocky was winning, when Drago was winning. It was a complete ghost town. It was the first time I'd ever experienced a movie like that. Here I am, a kid. I was like, wow, these people are really into this Rocky thing. I didn't know, but it was just a fascinating experience. I don't think I've had any movie-going experience of that caliber since then in terms of audience participation. Granted, I don't.
That was still right in the mix of the Cold War.
It was right.
It was.
So Rocky was very much the symbol for all of our hopes and dreams. Dare I say it?
He really was. Him and Rambo. I mean, has anybody better encapsulated the U.S. than Sylvester Stallone?
Maybe Schwarzenegger. That's about.
Yeah, except the problem that Schwarzenegger was like,
cop.
you're like, oh, there's an American. I am proud to be an American. Get to the chopper. Get to the chopper. Maybe the all-time greatest line. Get to the chopper now.
That's pretty good. That is. But a trade we did see that we actually saw some interest on the desk, and it actually made it to Reuters as well. Shaw Group was part of a buyout. Was part of a buyout this morning. But more interesting than that, there was a great trader on Friday that was supposedly buying about 2,000 contracts of just out of the money calls for about a quarter, expiring in August. I think he was buying the AUG 29 calls for about 25 cents. Those things traded up to, I believe, about $14 today. So that was a return of about 5,600% in less than a day. So, needless to say, he'll be.
He's a very skillful fellow over
Yeah,
there.
I mean,
One of the better traders I've seen in the last couple of years.
Amazing how he's almost as good as that guy who blasted out all those downside S&P puts the last show you were on. That guy did fairly well as well. But this guy, that's kind of stuff we like to highlight on the odd block usually, just because it's fortuitous time nature of these types of trades. Obviously, someone. I won't say obviously, but it seems pretty apparent that someone probably knew something was in the wind before these kinds of things go up. And,
It'd be kind of cool if they did the deal from Shaw's Crab House.
Yes. That would be.
They met over.
That's what it was. It was a busboy at Shaw's Crab House because they signed the deal there.
Right.
And he overheard them as they was cleaning up the plates. It was.
He only bought half of them,
Yeah.
and then he got in a cab, and the cab driver
bought the rest.
Exactly.
Right now, they are putting together a takeover bid for Shaw's Crab House as we speak.
I get cab drivers all the time that are like, "Oh, you're in the financial markets. I trade FX." I meet so many cab drivers that trade foreign currency.
Somehow I
Foreign
can see you getting into a cab and sitting down saying, "Hi, my name is Mark Sebastian. I'm in the financial markets," and then the conversation proceeding from there.
When you sit,
Do you trade Forex?
no, when
As a matter of fact, I do.
No, I mean, well, it's going to sound so horrible, but, especially to and from the airport, you're on the phone, they overhear you. I'm not the type of guy that's like, I'm going to ignore the cab driver and not say hello. Or you just get in a cab with a suit, they assume you're either a lawyer or in high finance. You know you're in high finance when you pronounce it high finance?
Yes, that's exactly how. I'm the opposite. I try to ignore the cabbie at all possible, just because, not to be rude, just because you get down a really dark road and you start talking to some of these guys. I told you the other day I was in a cab and all the bully starts talking about the PFG mess. And it wasn't like I had brought it up. It wasn't like he knew what I did for a living.
See, I told you.
He was
They're
just
on top of
They
it.
are. It was scarily so. I don't want to go down that
They're
road with
on
him.
top of it.
And he's like, "Did you know him?" And I was like, "Well, let's talk about something else." But yeah, I'm amazing the reach of the cabbie into our business.
Yeah, you were like, no, but I heard that Hasbro's coming out with a new G1 Optimus Prime remake.
That's exactly.
That'd have been the right way to. That's how I'll steer the conversation. They give up then.
But Mr. Kavanaugh, I know you were here a lot with us today on the radio. But anything catch your eye and the activity you saw coming across today's desk? I know you've been kind of busy with other projects over the past week.
Nothing today. I have an anecdotal story from about 2 weeks ago now. Right around options expiration, there was a stock Mellanox, MLNX. Had a client call in. He was short some at-the-money puts, an at-the-money put spread, the 65/60s that he put on in late June. And the stock had gone up to about 68, 67 and a half, and all the time to expiration had basically withered away from the stock. 1 day till expiration, the put spread, I think he had like 12 contracts. The put spread was against him in value by about $800, and the stock was $3 higher, and a month later in progress. So he said, how could I possibly be losing money at this? And, to point it out to everybody, I always tell everybody to look at three things when they put on any kind of an options trade, whether they're long, short, or spreading, is look at the delta, look at the theta, and look at the vega of when you enter. And the volatility on this stock, the Vega was probably around 60. The implied vol was about 60. And when we looked at the implied vol that day, it was just a hair under 300. So
never a good sign.
Yeah, I mean, basically right there, you've got a wheel that's spinning so fast, nobody knows where it's going to stop. The at-the-money straddle was trading for about $15. And we covered half the position just from a risk management perspective. If he would have kept the whole thing, it would end up working out fine. I think the next day it gapped up to like 95. But when people find themselves in those kind of positions, it's good to learn from others. So I always try to share those volatility incidents and volatility occasions because they do happen. And when you scratch your head and say, how could I possibly be losing money doing this? If you find yourself in that position, you gotta figure out that it is related to the volatility, and then the best way to play it. So
that's the type of scenario where if you're short that put spread, by all rightful, especially going that close to expiration, by all rightful indicators, you should be doing all right on that spread. When something all of a sudden you see yourself that you're not, and you see it gapping up from 60 to 300 vol. Obviously, something is in the works that you are unaware of. That's a very, very dangerous scenario to be in. It's gapping some way. It's going up. It's going north. It's going south. You don't know which way. So that's definitely the right play to make when something like that. You want to take some of that off the table. So you literally could have been down 40 handles the next day. That kind of vol. You don't know what's going on. So something is in the wind, like Shaw's Crab House.
The way we looked at it was if you took the full hit, you'd be out $6,000, and the client wanted nothing to do with the $6,000 loss. He was more comfortable with a $3,000 loss and still had the potential of making a little money on the trade. The percentages were less, but he took half the risk off and he made less money, and it ended up working out. But the key to his success in that trade was, if it wouldn't have worked out, he was still more comfortable with the risk that he had on, knowing that the at-the-money straddle was priced, almost 25% of the entire stock. So he was it was easier for him to sleep easy, knowing, hey, if it does gap down $20, I'm only going to lose half of what I originally had out there.
Exactly. Like I said, a scenario like that, you want to start taking risk off the table because you don't know there's a large unknown looming out there that is always a very dangerous situation to be in.
I'm curious, how long of a trader was he, not taking into effect that the theta and the volatility risk of putting on that trade when he did?
He's been trading for quite some time. I think that there's always times when you look at it's a very good point. When you look at the perspective of how long you've been trading, well, I've been trading for 15 years. You really have to break down what somebody means when they say 15 years, especially in the options world when you're a premium seller. A good premium seller may only make 25 to 35 trades in an entire year. If you have $50,000 in an account and you stick to a couple indices and a couple stock plays here and there, if you're picking the right stocks and the right indices, you might make only 12 trades a year. So I know people that make 12 trades in a second. So when you look at, well, how long has this person been trading, the first time you get caught in a short vol situation where vol skyrockets and you don't know, it could take some traders years, especially if they're not playing in the individual names. This might have been this guy's first tangle in a biotech issue, which are a lot more volatile than your typical stocks, especially when there's a pending lawsuit or an FDA announcement on the stock. So I always look at your time, your age, how your experience in trading is how many physical trades you've actually put on, not how long you've been doing it. So when you're an options trader in the retail market, you've got an experience edge. If you've made 10,000 trades, I think that speaks higher volumes than if you've been trading for 10 years.
Yeah, good point.
Is that the old 10,000 hours?
Yeah, that's the old Malcolm Gladwell.
That's
I
great.
stole that.
No, I think it's great.
Just change it around, 10,000 trades. You put out your new book, forthcoming.
10,000 trades makes you a trader.
From Options Insider Publishing.
Is that right? That's what it is? That's good to know.
There are so many interesting topics on the table these days, and so many things going on in the industry. Mike and I, we were just doing that show earlier today with a lot of very industry-focused topics on it, and one of them is still, I think, at the front of the mind, top of the mind for a lot of people here at the table today on the show, is what's going on on the future side of the business, particularly what's going on over in NFA. And I know, of course, a series, let's just say, of scandals have rocked that side of the business, and NFA and CFTC have kind of been placed in the crosshairs for not catching, what you had. You had Refco, then you had MF Global subsequent to that, and now you have Peregrine, third strike, and you're out. It's kind of, a lot of people are wondering exactly what's going on that side of the fence. I know, Mike, you've been chatting with a lot of NFA folks lately.
Well, the thing that kind of took me off was the day after, the announcement that the CFTC basically shut down PFG or Peregrine.
Brief side thing. PFG Best, who gave them the best as a part of their PFG? That's my question.
Self-proclaimed, like Michael Jackson.
Yeah.
Why wasn't it PFG guarantee?
Yeah. They should have said
PFG, we take your money, guaranteed.
Yeah, PFG.
Well, they were
best for losing money.
Total side note, but they were printing SpongeBob Square Pants gold coins, and they were on their website, the PFG gold coin set, with the picture of SpongeBob Square Pants on it. It was a complete marketing play, but you see things like that, and you put your name on that, and you're selling gold coin sets with SpongeBob Square Pants.
Who lives in a pineapple and invests in gold? SpongeBob Square Pants.
Sponge Russell for whatever that was. But the thing that really took me off guard was the morning after the CFTC shut down the clearing firm, the NFA sent out an open email to market participants stating that if you were a CTA or a CPO operator, please get in contact with the NFA with your account number, where the account is, who's restricted from trading or who has trading authorization to trade the accounts. I mean, that's something I would think the clearing firm, in this case PFG, would have readily available,
yes.
Which, now you find out they had a one-person accounting firm in Glen Ellen, which is a suburb of Chicago. It's a one-lady firm. You find out that Russell was on the steering committee or one of the committees that had a lot to do with the steering of the industry for the NFA. And, it sounds like Madoff all over again. And I get calls and emails. I have clients that had different accounts. We didn't custodize there, but everybody that trades futures or is in the options world, they get a call from a broker or CTA, and they say, "Hey, I'm going to give a little money to this guy." And so I had clients affected by it. People calling in, I've always said that this business is a business that's predicated on trust. So when people call me and say, "Oh my God, I could never trust anyone. Can you believe this happens? I can't believe this kind of stuff happens." I've always said, well, look at every industry. When Arthur Anderson was shredding Enron documents, I didn't run down to my accountant's office and say, "Look at what you accountants did to my world." You get a feel for who you can trust. What we always tell clients is, spread your money out a little. Give it to 10 people or 5 people that you think you trust. And then once you find somebody that you actually can say you trust, you start giving that person more money. In some people's instances, they may not have a lot of money, and all of their money might have been tied up at PFG, and it's a horrible scenario. I've heard anywhere from 30 to 50 cents on the dollar is going to be rewarded back, and then it's basically up in the air to what people are going to get from that. I think at the end of the day, after the MF Global bankruptcy, it was about 72 cents on the dollar.
Yeah, it depends. 80. I think it depends on the deal and whether you're a farmer or not and all the different things. But there were some people that got as high as 94 and some people that got as little as 72.
And what blows my mind is when people say, "Can you believe this happened?" And to the extent that it happened, no. I can't believe to the extent. But there's always dishonest people in every industry, and you really have to, I guess you really have to pick who you want to work with and who you can trust by not blindly trusting people, but establishing a working relationship and building trust as you go.
And not to beat up on the NFA too much, but why not, since we're all here and they're big actors in this, and they are an easy target. But I recall a release or a comment someone at the NFA made shortly after this news erupted on the tape, and they're like, "Well, look, this is an example of us doing our job. It's us, us demanding electronic documentation from him that precipitated all of this and caused him to do this and try to commit suicide, and that was the straw that broke the camel's back. So we caught this activity. This is us being on the ball." And you have to say, well, maybe, but then where were you for the last 20 years when this guy was perpetuating fraud upon fraud? I mean, he took this money to build his little castle there out in quote unquote, this castle in Iowa for the headquarters. It's amazing that this. Once or twice, maybe. And, of course, it's even worse when they had the spot check in January. NFA did a spot check of all the brokers under their command.
They've just been fined for fraud.
Yes.
I mean, that's the ridiculous thing. And
it was like it was being tangentially aware of fraud.
All right, and let me just say this. I kind of get the MF Global, the MF Global fraud was awful and terrible and stupid and, a disaster. But this is a very, very retail-centered company, and the damage that is done by CME Group, CFTC, NFA, Jefferies, who is clearing them, and U.S. Bank Corp. Not stepping in and making every single one of those accounts whole is far. They are losing far more money than they are saving by pulling that type of crap.
I think that would be the lesson they would have learned after MF Global. CME could have come out right away and said, "You know what? There are no losers in this business. We're watching out for this." Just the PR cost alone to them was enormous. If they had come out and said that early, they would have stemmed a lot of the tide. Would have been a lot more trust in this business. And again, after this happened, coming out and said again, we will step into this breach. I mean, it takes a little bit of a hit in the near term, but the long term benefits are enormous. That type of action.
And to be honest, I mean, you get a couple of those big. You get Jefferies, CME, NFA, CFTC, and a couple of these other organizations. NFA raises rates on the other firms to cover this. I mean, it is beyond ridiculous.
I want to pipe in one last thing. This is a tough one because when you look at who regulates the markets, the CFTC on the future side with the NFA, and then you have FINRA and the SEC. You hear horror stories about people that are managing their business, flying by the seat of their pants, and they're not paying attention to the regulations. You hear that the regulators are overworked. They don't have enough people on staff to actually physically do the regulation. Why not put a bounty on these guys? I mean, I was down on the floor for 7 years. This is all I do. I run a financial services firm, and I know how hard it is to make a buck in this type of environment. I would have no problem going into any FCM, any broker-dealer, and running an interview and knowing that the person across the table from me is either running a legitimate business or not. If we are self-regulated, put a bounty on these guys. If somebody said, "Hey, Kavanaugh, PFG gets caught with this," I know that if I'm in that industry, I'm going to get an audit. We know that on the security side, as part of this Dodd-Frank Act, they created the PCAOB, the Public Company Accounting and Oversight Boards. So every BD basically now is going to have to pay money. It's basically the equivalent of the fallout after Enron that they created Sarbanes-Oxley. Now they're creating this PCAOB. When the SEC instilled Sarbanes-Oxley, they said the estimated cost per firm for a publicly traded company would be about $100 to $150,000 per firm, and those numbers worked out with a word that rhymed with illions instead of hundreds of thousands. And you look now, and they're estimating the cost for a non-clearing BD or an omnibus BD to be about $3,000 to $5,000 for a PCAOB audit, and a full clearing broker-dealer to be about $150,000. There's going to be massive consolidation because those numbers are going to grossly underestimate. And now you've got another government oversight committee doing the regulation. At some point, the people that are running the legitimate businesses have to say, how long are we going to let these guys go on? We're shelling out the money to actually pay the regulators to regulate, and they're not regulating. So let's all work together.
And Congress is coming out with more regulations. Dodd-Frank, 2 years, nothing. Half that's not even enacted.
You mentioned the reality show earlier. I think we have a new reality show now. We have Kavanaugh Bounty Hunter for Futures Bounty Hunter. FCM Bounty Hunter.
He's already got the balding blonde mullet.
That would be a very.
By the way, he is neither balding or blonde.
I like to refer to it as the Wisconsin waterfall.
Maybe we can get Denzel Washington to star in that show as well. What do you say? I think
why not?
The double whammy of Denzel.
We'll go for a two.
You missed it earlier. He wants Denzel Washington to star in any biopic of his life there.
That would make sense. No, it does. It does.
Great overlap.
Very similar. Very similar.
Very similar. In every way.
I mean, I would say the only problem is that. Is Denzel Washington good-looking enough to play you?
It's a good point.
That is a good point.
It
is somewhat intimidating just being across the table from you.
It is. This
level of manly handsomeness.
There's a reason why we do these over Skype.
That's true.
It's the handsomeness in the room.
It does distract everyone at the table.
And there's a reason why there's no women on this panel. The floor would just be it'd be 6
Between
inches.
Between him and when Navabi was on the show, forget about it.
Oh my gosh, the floor would be 6 inches deep in water.
Tim Navabi was just
incredible,
irresistible. Well, speaking of irresistible, or perhaps the lack thereof, or the opposite of irresistible, even you guys have been on the desk for a while now since the whole PFG news broke. Obviously, futures a big part of what you guys do there every day, day to day. What kind of feedback have you been receiving from the customers and clients there? Has this started to? I know initially there was a little bit of furor over it. Has it died down? Are you seeing people still calling on the futures side and saying, "Hey, what's my protection here? How am I covered on this?" Is it still a cause of concern whenever they're putting another trade in, or what's the response there?
Well, surprisingly, it's actually a little different than MF Global. When MF Global debacle went down, everybody was calling, wondering how safe their money is at Options Express. And then obviously, as we are owned by Charles Schwab, they think that everything's great, and we tell them what is protected here and here and here. Now with PFG, there's really not much concern. They're pretty much just asking, what's the fastest way I can get my money over to you guys? I want to start trading futures right away. There doesn't seem to be as much concern, I've noticed on the phone, compared to MF Global.
Yeah, I agree with Sean. We're definitely not seeing the MFG fallout that we did.
Do you think people would be hesitant to pull the trigger at any broker now, given everything that's been happening?
Yeah, you would think that. And I was working at Refco when they went under, and it was, I think, almost worse than MFG. I mean, it was.
Yeah, well, you got to think that this is great for the big houses and awful for the little guy.
Yeah, there's a silver lining. Unfortunately, it's not for the PFG customers, but we are seeing a lot of people coming over and, from PFG.
Silver lining for my pockets. It's been fantastic.
The good news is
my bonus is through the roof.
3% more on my bonus. The bad news.
No, well, look at it this way, and I've said this before on the show, is that when people trade futures at Options Express, Charles Schwab, is that we sweep nightly their funds into an SIPC insured account. So unless they hold a position overnight, the margin's held at R. Joe Bryan. Yes, you have the same risks involved, but if it's not, you got 5 gold positions on, so we're holding $20,000. The other $80,000 we're going to sweep over into an SIPC insured account, and that money is safe. I mean,
that's actually a real major key of, I think, trading futures, and that's why going with a somebody that deals with firms that do that. I think MF Global did not, but MF Global had the type of client where the guys are smart enough to, as soon as they're up enough money, they draw out, and. So, those guys, some of the guys I talked to that were MF Global clients were extremely, extremely wealthy. And while they're annoyed that they lost money, most of those guys that did not have that much money tied up relative to as a percentage of their wealth. I think, and this is what's so bad about the PFG best problem is, they had people that had a substantial portion of their wealth locked up because they viewed it as the same as being with a Schwab or or Fidelity or any of those type of firms. They said, "Oh, this is segregated accounts with a bank, blah blah blah. I'm safe." And if you're a retail client, you need to know the facts. But the problem is most people don't. And I think until this whole PFG Best thing and MF Global for sure, most people probably didn't realize that there wasn't a SIPC or something or an FDIC for their...
Why isn't there?
Okay.
Especially now.
Again, recalculus.
How many of these? I mean, it's literally 3 strikes now, and you're out with this. I mean, having 3 firms blow out, taking so much customer with them. But yeah, 3 strikes literally, and you're out. Refco, now MF Global, now PFG is the final straw. So hopefully this will, and obviously we're going to see both of these regulators, CFTC and NFA, really torn apart after this. So hopefully one result of this will be a better insurance for these customers, because you can't have this. You can't have customers time and again come up holding short. If someone's got to step into the void, and hopefully that will happen going forward. But scandal. Let's put the scandals perhaps on the back burner for a second. Of course, there are so many scandals to talk about these days. Mark, you mentioned you mentioned on your client side, John and Sean.
John and Sean.
John and Sean. Mike gave us the advisor perspective with his clients. We have John and Sean here talking about the brokerage side. You touched on a little bit on the advisor side. You obviously have a little bit specialized clientele, a little bit more active, probably a little bit more engaged. What's their take on this? A lot of them mostly doing options, not so much on the futures side. But I'm sure some of them
we had
are
a lot of
engaged
guys
in this.
do options on futures.
That's true.
I actually had a pretty big client lose a chunk of cash in the PFG deal, and to betrayed is the understatement. The self-directed investors. Typically, even the ones that really know what's going on probably don't know that a futures account isn't backed up. So you've got a combination of lack of education and just total betrayal by what PFG did. And I talked to a lot of the other FCMs. Your Schwabs are okay, but I would not want to be like your Lynn Waldocks of the world, who are getting absolutely trounced by what's happened. And Lynn Waldock has not done anything wrong, but they are getting beaten alive. And the individual traders over at PFG Best, guys had hundreds of thousands of dollars in bonuses that they were supposed to be getting paid, gone. Guys had massive CTAs they'd built, gone. And then their clients had returns, hundreds of thousands of dollars, gone. The damage done to the futures industry by PFG, if people are not made right, is probably far greater than MF Global. Not to your OX client, but to those that actually want to actively trade futures, no one's going to do it. They're going to be afraid, I get it. And now is the time where trading futures is and futures options. Futures options were, if things have been handled right the last year, I think futures options were about to go through the kind of heyday that equity options had from 1997 to 2007.
We had corn, we had metals lighting up the tape
corn,
last year.
Metals, oil, even the S&Ps. Span margining is such a wonderful thing to the small retail investor. It allows them to trade, an intelligent person to trade with margin the same way that somebody that's covered by FINRA and SIPC can. And we were about to see the golden age of commodity option trading, maybe not commodity futures, but commodity option trading. And the CME group, every time something like this happens, they make a better and better argument for them to be broken up.
That's certainly, just speaking of the CME group right now, there still is in the news as of today, as we were talking about MF Global, they're still battling over a $130 million payment that CME group made to former MF Global customers and how that's supposed to be allocated. So here we are 8-10 months later, whatever, from when that MF Global news was announced. Still, people have not been made completely whole on this thing, or don't even understand how much of a percentage they're getting back on their dollars. And so to see this kind of going on again, and you're right, there's a little bit more of an insidious nature with the PFG actions because that was essentially outright theft, whereas MF Global, they were allocating it in different accounts to use it to trade. It was obviously horribly wrong, but it wasn't.
Corzine belongs in jail.
They weren't taking it to build. Corzine didn't take it to build his house. At least not
right, he wasn't. And this guy was.
But you're right, he does belong in jail.
By the way, how inept is this guy? Wasendorf. You can't even kill yourself, right? God, you jerk.
You know
what we should do is what he should have done is gone into walked into the middle of his office and said, "Guys, here's what happened." He would have easily been able to kill himself.
Yeah, that probably would have. They would have facilitated that for him.
Exactly. They would have made sure it happened.
There's probably some people that would like to help him at this point.
Yeah, no, I think there's a lot of people.
The thing that blows my mind, I look back. You saw it in the equities world in the late '90s, early 2000s, and you saw what happened in 2008. I call it goal alignment. When the institutions that handle money, when the goals of their firms disalign with those of their clients, that's when all these problems have happened. In the equities world, and now you're seeing it in the exchanges, that happens when these organizations go public. They IPO, they have C-level executives, and the shareholders, which they speak of, are the board of directors and the C-level executives, that they're incenting themselves to do whatever they have to do to raise the price of the stock, because at the end of the day, the shareholder, the majority of the shareholders that are driving the business in publicly traded companies are the C-level execs and the boards. So if you have an exchange that's publicly traded and the C-level execs and the board of that exchange are driving and funneling the business, they're going to do everything they can to make money for the publicly traded face of that company, which isn't necessarily going to be the best for the market structure, and the end user of the market. So if I had to advocate for anything, I'd say let's take the exchanges non-public. Let's actually get them in there so they're a market center.
Reverse the last 10 years of
Reverse
market
it. It doesn't work. You look across. There's been no major evolution in financial advice or the banking system since Renaissance Europe and the de Medici family when they started taking deposits and loaning money out, right? And there's been no financial advice that has been better than the first piece of currency when somebody said, "Hey, kid, don't lose that piece of currency." And now we have people in firms that are publicly traded and the exchanges, which you could argue or not, if you want a better argument, pro-life, pro-choice, or whatever. But if you want a non-fun argument, talk about how exchanges are public and the end user, the firms that are clearing through the exchanges are public. They're not cohesively working to help benefit the end user. They're fighting for who can make more money. And one of them has to either stop fighting to make the more money and actually do the right thing to improve the market structure, or get out of the way, and there'll be some private firm that comes around and says, hey, I think I know the right way to structure the marketplace. I know how to address the issues of the customer SAG accounts in the futures world, and this isn't the best profitable thing for an exchange. However, it's the best thing that's profitable for the end user of the marketplace, and the people in the exchanges will do just fine.
Yeah, it's interesting that you mentioned the clearing, and that can get us even to a whole other aspect of what's taking it away from perhaps a step back from the futures aspect for a minute. You touched on clearing, and that gets us to some other interesting developments that have been going on in the space of late. This is kind of like, I think, maybe because we did the other show just recently, we're on the industry topic right now, but it's interesting stuff, I think, for our listeners. And John and Sean, you guys are a little bit removed from this over at OX because you obviously have Schwab behind you now, so you don't have as much of a stake in the clearing game. You guys are pretty much self-sufficient on that front. But we've seen a huge development on the retail brokerage side, of course, with Penson essentially going the way of the dodo and being acquired by Peak Six, turned into Apex, which is now, of course, the major clearer for most of these smaller options brokerages in this space, and what that means to have a firm that is essentially a competitor of theirs that owns Options House, regardless of what Chinese walls they put between the two. The firm that is their competitor essentially now clearing their competition and saying, okay, Zecco and okay, Trade King and okay, every other Trade Monster, every other.
They raised their rates.
Yeah,
they're suing them now.
They raised their rates exorbitantly, and you can probably make an argument, given some of those court documents, that maybe Trade King was running a little light with what they were holding at the company anyway. That probably was one of Penson's sales pitches to keep them active. Here, keep a little bit less on our books. So that was probably one of the sales points.
Well, Trade King offered him 4 Colts in lieu of a couple $100,000.
But it brings up an interesting prospect of how the firms like Penson has been circling the bowl for quite a while. I don't think this is a shock to anyone. I think it's more surprising to me that so many firms would let themselves be put in this position. That if you couldn't see the writing on the wall at Penson a couple of years ago and taken steps to either become self-clearing or switch to a different clearing firm, you kind of put yourself in a very difficult position.
I have a lot of clients that are very self-directed that'll manage money in different accounts, and come the last year and a half, there is not a single client of mine that would do business with a Penson clearing firm. Actually, I would tell Trade King, I would tell Trade Monster, I'd love to offer you more, try and do webinars and things that help you drive business, but the problem is that you're clearing Penson and nobody trusts them. Clear Merrill, clear New Edge, clear Goldman, ABN, OX / Charles Schwab, clear anybody. But Penson is a absolute disaster. And if you couldn't figure that out when their stock price dropped below $1 a share,
exactly.
I mean, 12 cents. It was at $40 about a year ago, and now it's gone. It was just trickling every day. It was just trickling.
It was just and they were absolutely the loose flyers, and a lot of their practices. All the cowboys are any cowboy is not going to be able to do a lot of what they're doing, and don't be surprised if you see a lot of these smaller firms move to some other clearing firms like New Edge.
Well, they have to. I mean, it's not a tenable situation to have a competitor clear you. That just makes no sense. And also, you see a lot of
Option House is such a game changer in the option business.
Well, but it raises interesting questions. We've been contacted at Options Insider by a lot of smaller and mid-tier options brokerage firms saying, "Hey, wow, our competitor now has access to our customer records and everything else like that. They can reach out and cherry pick our best customers. They're sending out clearing documents on our behalf to our clients. This is they're demanding more deposits. It's a very dubious situation for a lot of these firms to find themselves in. I wouldn't be surprised if this action precipitates a lot of mergers and a lot of consolidation in the brokerage space. Obviously, you guys in OX a little bit unique space to talk about.
We self-cleared.
We self-cleared. So that's
a huge project. They should take it upon themselves.
They should. I mean, that's something you guys did, and now we have Schwab behind you, so that makes it doubly. The Schwab behind you that makes it even easier for you guys to kind of look askance at everyone else in the business and say, why wouldn't you go down this road? And I've talked to several firms who recently, within the last year, went off self-clearing and went to Penson. You're like, why would anyone do this, given the obviously they're giving them a great deal there, but still they've made their own bed now, kind of diving in with this firm, and now they're reaping some of the whirlwind of that.
Well, it really became a race to zero, and you look at firms like Options Express, they maintained and they held their ground. They said, you know what, no, you can't go that low on commissions because it's not possible
Someone's
to run a
pay
firm.
for Mr. Grigas here in his Ferrari. That doesn't come cheap.
There's no parking out front either.
Yeah, no parking out front. Once a month, you guys get some food brought in or something on a Friday.
Not for trading though.
Yeah, no, but there's a cost for doing business, and the race to zero. You're basically you just had people saying, "Here, well, I don't care. We'll just do whatever we have to do. We need to make money." And when you look at how razor thin the profit margin for a firm, that you don't want to pay very, very little commissions. You want to pay reasonable commissions to the firm holding your money, because they're the ones that are going to employ the talent and the risk management department to make sure that somebody doesn't come in and blow up the entire firm. So when you start looking at cost-cutting measures at clearing firms stem from the operational point in operations, that's risk management.
Right, and you go with a firm that clears Penson, and here's what they're doing with your paper. They're basically shooting up with heroin, putting a really tight short dress, and then selling it out on the street to the highest payer who will pay for that paper. And it's awful, but people don't realize what can happen to your paper. You can go with an OX or a / Schwab. You can go with a Penson, and your paper gets treated two completely different ways. One of the things I make a habit of doing is having 3 or 4 different accounts with different firms, so I can see kind of where they're at and what they're doing. And you can actually see fills. I mean, you'll get filled in OX and not filled in firm XYF because firm OX sends the paper to
XYF.
XY, your paper's F. But you can, OX, your paper is probably not just going to sit on some make or take exchange from somebody that's trying to scalp a dime off of your order. You go to another firm, and they are going to sell your paper to the order flow handler that is going to try and get the most money out of your paper. And it will start to matter, especially if you're trading more than 10 contracts. A couple of contracts here and there, that's one thing. If you're the type of guy that's walking in selling 10, 20, 30, 40 contracts, as soon as you break that 10 lot and electronic eyes aren't looking as much, where your paper go really matters. Where your paper ends up.
That gets into that, that nebulous realm we talked about a lot on this show, where the people who are a little bit more sophisticated, they're just doing even 10 lots. It's maybe simple spreads, 2-3 legs. Those people are starting to really get caught in that that black no man's land out there, where these spreads that we talked about on the earlier show get kind of lost, where they're on a spread book at one firm and they're lost and they're not getting executed at the other. So you're right, anything that has to do with that, and if you are clearing or trading with some of these firms that are clearing Penson, that certainly could play into those order routing and execution decisions, and plays into some of the questions we receive all the time. I'm sure you guys do on the desk, and you over at Option Pit as well do, is like, why am I not filled on X spread? It's bid here, it's offered there, why can't I get lifted on this or sold on this? And a lot of that plays into that order routing decision.
Yeah, and it's interesting. I talk to a lot of guys that do the not program trading,
algo trading.
No, where you run a newsletter and somebody
auto trade,
and God's honest truth. And this is not because we're sponsored, but everybody that I talk to that runs an auto trade will tell you they can actually see the fills, and OX is always the fastest to be filled. They're ahead of every single major. I don't know how you guys describe yourself. You're full service, but you're also self-managed at the same time.
The execute service or the auto
yeah,
trade?
the execution, the auto trade execution. You guys are faster than everybody else on the street.
I mean, honestly, it's a lot of manual process that goes into it. I mean, I've had some calls from Kavanaugh and Tucson when they're working, small premium orders and say, hey, can we get these filled? But I mean, it's definitely manual.
Yeah.
For the bigger stuff, we set it up with a broker ahead of time. Maybe feel out the crowd. See if we can get anything filled and kind of test the waters and then push it through. But we have had publishers come back and say, hey, I'm going to move my stuff from XYF.
XYF.
Okay. Are you guys? Can you accept my clients? Can they bring them over?
Right.
Can you give them a special commission rate? Can you match what I already have there? And we've seen 200-300 accounts come over from competitors because of that fact you just stated.
Yeah, you guys are faster. And I wouldn't say that if it wasn't true. I've got
Shameless
better
shill,
things.
sir, but it is.
I am.
Shame.
Thankfully, John said he'd pick up the beers after the show.
That's true. But that gets to what you said before, too, about the cost, too. There is a cost to quality execution. Having someone like John on there manning the desk and executing for you, that doesn't come cheap. Like I said, the Ferrari, and all the other ancillary needs that John has. But
it's true, though. Like, how low can you go before, everybody screamed for transparency in the marketplace, and now that it was made available in the late '90s with the computers, that guy from Scottrade jumping out of the helicopter. You want transparency? We'll give it to you. The market literally made more technological advancements in the last 8 years than it did in the first 158 years. So now that we have all this transparency, the prices go down to zero on the commissions, and here we are. Do we really want all this transparency? Do you want full automation, or do you want and need a guy like John Grigas on the trade desk that's actually going to physically say, hey, this thing can't be in the wood chipper that is this electronic marketplace. We got to pull this one out, and we actually have to finesse this one. We have to care for it, nurture it, and put water on it, and love it, and wrap it in diapers, and whatever you guys do over there on the trade desk. It has to be physically taken out of the wood chipper and handled, and you can't do that for 4 cents. You have to pay a premium to get your orders handled properly.
All right. Well, I love getting together in the live room every now and then just to catch up on the old option block show. We had a nice free-form show today. We didn't really hit into our different segments. No. We kind of jumped more into some of the pressing issues and big trades and big scandals facing the option world today. But now closing out here, as we're closing up this raucous live episode of the option block, we're going to go around the table here. Starting off with you guys here over at OX. What are you guys watching for the rest of the week? What's on your radar here from a trading perspective? What's on your screens here? Start with you, Sean. You have the misfortune of being directly to my left.
I just want to touch on the economic news that's ahead of us starting tomorrow. I mean, today we pretty much could have slept in all day and not missed much. But starting tomorrow, the FOMC meeting begins. We also have consumer confidence. Going into Wednesday, we have the ADP employment report, also ISM manufacturing, and then later on, 2:15 Eastern Time, we have the FOMC meeting statement, which is parlayed into Thursday by the European Central Bank rate announcement, as well as the Bank of England. I was trying to look back and see when that was ever in the same week, when the FOMC and the ECB rate announcement was ever in the same week. I couldn't really find it, but it looked like it was around 2010 last time it was actually in the same week. So that should be an interesting one evening into the following morning. And then lastly, Friday, we all have the non-farm payrolls number for the month of July. We all know June was a little bit disappointing, so this should be a pretty big report coming out.
At least not coming out on the Friday of a holiday weekend this time.
Yeah, right?
That was an odd one. You have to watch it. The premium wasn't coming in for the weekend because everyone was keeping their powder dry, but you couldn't trade it that day. It was a very weird scenario. John, anything else on your horizon?
Yeah,
here?
just quickly, I'm going to look for Groupon and Zynga both to be bankrupt by the end of the week.
Don't tease poor Andrew on the Zynga. Man,
And
he
then,
took a rough ride on that one.
Hey, I'm with you on Poupon, though.
I've been a fan of that the whole time, and I think I've finally just thrown in the towel. I mean,
Even since the last show.
Oh, my God, what a terrible
just
company.
Cut pretty much almost in half, coming out pretty much saying that ridiculous acquisition they made of Draw Something for, what was it, $250 million? For essentially, they bought an app. They bought an app that was popular for a week. And now they're saying, well, this hasn't really lived up to our expectations. Yeah, it was a popular app for a week. That's what happens with these things. And this literally was a company that had, I think 6 people left or 12 people left. This was their last shot, and they were going to fold up their doors. And then here comes Zynga. The app takes off. Zynga gobbles them up, I guess because they're thinking it's .com days again. They have stock to throw around. Let's throw it around. And foolishly spent. And then, of course, we were also talking about, on the last show, it was Amazon. We were talking pretty much in the after how terribly they got that wrong.
That sells off.
We were watching Amazon in the after hours. I think it was selling off multiple handles. We're like, wow, looks like the end is at least for the near term is from this Amazon run is over. It was selling off aggressively. Coming the next day, it was up 10, 15 handles the next day.
Yeah, it was down 10, 15 in the aftermarket.
You don't see that degree of incorrect analysis in the after hours that often. That was a fun one. We all looked great the next morning, commenting about this thing that's down 5, 10 handles, and wow, it's up. What are you talking about? It's up 15.
Yeah,
so that made it a fun show. But yeah, we'll leave Zynga alone for now to avoid teasing poor Andrew and his synthetic Facebook. The poor lobster. That's like
I wouldn't want to be.
That's like Uncle Mike Cisco.
Let's not forget being any type of Facebook relationship has not worked out so well.
Yes, that's true.
You know, I'm just waiting for Apple to step in and just buy them. It could happen. They've got enough cash on hand.
What do they gain from that? I guess better integration of their products, but
better everything. Better, they already have their little cult following. I mean, what better way to make sure that dumb college kids continue to buy their product than to go with the product that
please use the term fanboy.
The only thing that dumb college kids like more than Apple is maybe Facebook.
That's a requisite Apple slam for the show.
Yeah, Apple can put out their little pouty, why doesn't anybody like us, out on Facebook, and then everyone would just buy it.
That's what they want. They want a company that makes no perceivable money except for
we're
their initial founders. I think they came out something recently saying we don't play by the regular rules of Wall Street. You can't look at us that way. And it's like, if that's the way you
Facebook?
think, that's the way you think. Then don't come to the dance if you can't play the music. Essentially, if you can't dance the dance. And that's the Wall Street. You have to, if you're going to go public. That's how they're going to look at you. That's
they basically went to a restaurant, ordered the surf and turf dinner,
off the menu,
and now don't want to put out at the end of the day.
Well, Kavanaugh, you're next up here. What are you looking at around the block, aside from getting all the I's dotted and T's crossed here at KYO HQ?
I have been looking at I's and T's for a while, and hopefully within the next month we'll have the pen put away, dotting I's and crossing T's, and hop back on the trade desk. And we're looking at a number of things. The commodity markets are moving across the board. Anytime you get exchange margins raised, I think John and Sean were hitting on it before. It's usually a time where you're near a top or a bottom. So within the next month, trying to craft some positions in the commodity world and being back on the desk, I look forward to it.
It'd be a nice change of pace for you from
yes.
The flurry of biz dev that has been your life.
Biz dev and interviews and all the fun stuff that our clients appreciate that we're out here doing it, but equally needed on the desk as well.
Mr. Seabass, what are you watching here for Around the Block? What's catching your eye? Aside from, we didn't really get a chance to hit on VIX and Eurozone and all that fun stuff going on out there.
I know. Well, like I said, I think the Samsung Apple thing is fascinating. I'm watching the Drew Peterson trial, obviously.
But some puts on that one there.
No, I mean, I think that commodity prices are the thing to be paying attention to. We're not getting any rain. It's continuing to be super hot. And if the FOMC is dumb enough to put out some QE3, you're going to see what already would have been some insanely expensive corn go to just astronomical levels, and it's going to
be corn-fusing.
But yeah, we talked to Mark. You missed it. You actually went on the show last week where John said along a fascinating picture of some young children.
Oh yeah, no, I saw that. That was incredible.
At the corn crop a year before and a year after.
It's fascinating. I mean, I was just driving through southern Michigan and northern Indiana over the weekend, and it's toast.
It's gone.
It's gone. It's dead. It's like just burnt. There's and what's going to make things worse is we have to put ethanol into our gas. Yep. And ethanol is actually going to be raising the price of gasoline over the next year because, I wouldn't want to be – one of the big losers here that nobody really knows is Archer Daniels Midland. They're gonna take this one in the shin. Because everybody knows that they're a big seller of seed and things like that, but they're also they're the biggest buyer of corn, and it's not going to be good for them.
You think they would have someone at that firm would have had the foresight to hedge a wee bit of that?
I'm sure they hedged.
Of course, you see these things like airlines; they still have no active hedging, and their one major risk is oil, and they're not active.
Archer Daniels Midland has one of the most advanced hedging strategies.
You think, yeah,
they do.
That's your core business,
right?
You need to be active in that.
Even so, I don't think they saw what's happening December corn happening. There is no way you could, unless you completely hedged off all of your corn risk. What's happened to December corn will affect your bottom line.
It's kind of like the old VIX term structure, just gapping up in ways that no one really anticipated. Well, with that, that's going to do it for this live episode of the Option Block. But before we go, as usual, I want to give a chance for everyone here on the old All-Star panel, the live All-Star panel, to give some plugs for some upcoming events. OX boys, anything fun coming up in the land of OX? Some site nights, some educational nights, some dancing nights. What's going on in the land of OX?
Well, since I just shut down my computer, I have a little.
It's like it's your first show or something.
Yeah. I always confuse that ending. I combine them. I try to go first with the other one.
You go first with the other one.
I know we're going to be out in Boston in mid-August, and look at Sean here. Speak up, man.
I'll take over for John here. Okay. Actually, we're going to be in two spots.
Can I call you the mouse?
Actually, North Carolina before Boston. This Saturday, August 4th. I think I mentioned this last time at the Renaissance Raleigh North Hills Hotel. I'm not too familiar with that area, but if we have any clients out there or any prospect clients, people interested, it is a free workshop. You can attend it. It's from 8 a.m. to 3 p.m. I believe that is going to be Eastern Time, and it's in North Carolina. You can look at this workshop and register at optionsexpress.com. And what John was referencing, Boston was going to be the following Saturday, the 11th. Same time, 8 to 3 p.m., another free workshop. That's going to be at the Western Waltham on 70th 3rd Avenue.
Thank you for that.
Good old 73rd.
Oh, I love me some 73rd.
That's where all the fun times are. But speaking of fun times, Mr. Kavanaugh, you guys back on the webinar train at all, or is that still TBD?
We are to be determined. We're producing some new webinars and some new live in-person events. We'll roll out the schedule probably at the beginning of Q4, right around October 1st. So stay tuned.
Stay tuned, listeners, for that. And speaking of webinars, Mr. Pitts, Mr. Sebastian, what is coming up in your webinar / seminar land?
Well, we've got our monthly free webinar coming up in the middle of August, always the Wednesday before expiration. I'm going to be doing a talk for a big group tomorrow talking about my book, The Option Traders Hedge Fund, which I now can finally get you a copy of.
Ah, yes.
That's the big thing I would say is go ahead and get my book. I think it's actually really good. It comes with a free month of our service, which costs $125. So you spend $38 and you get $125 back.
I'm still going to wait. I'm going to wait for a better
deal.
Wait for the
deal. Wait for the
BOGO. Greatness. You name it. I'll be on Bloomberg TV tomorrow if you want to see my mug. Should be a good time.
Yes, I recommend all listeners check out Sebastian on TV so they can see in person what we have to stare at here and endure on the live shows on a regular basis. But of course, search for Options Traders Hedge Fund.
The best looking guy in the room all the time.
Search for Options Traders Hedge Fund on Amazon. and or just search for Mark Sebastian, Sebastian.
At Option Pit.
You'll find some interesting stuff there on Amazon. Most of it not by Mark, but it's still pretty interesting stuff.
Yeah.
There's some good art that pops up when you search for your name there. I showed
Oh, yeah,
sent it
no,
to
there's
you.
photographer.
Yeah, there's some nude, some live nude.
Well,
books,
and let's not
something
forget
like that.
Mark Sebastian, formerly the DJ from Z95.
Oh, well.
Nice. Who could forget
And
that,
his
Mark
and
Sebastian?
his memoir, The Gripping Tales of His Early Years.
Yeah, no, remember? Yeah, no. The funny story is that they used to do this thing where they'd call up random people and ask them who's their favorite radio station. If you said Z95, you get $1,000. And so the guy called one of my neighbors and said, "This is Mark," and I was 5 at the time. The guy said, "This is Mark Sebastian. What's your favorite radio station?" And the guy on the line goes, "Mark Sebastian's 5 years old." And I hung up on him.
That's funny.
There you go, listeners. An anecdote straight from the early days of Chicago radio history. But speaking of radio history, this show, unfortunately, is history. But before we go, we, of course, want to thank all of you out there for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.